You get that like pull right to the 9. It looks like it's going to roll over. You get all these suckers coming in trying to short it because everybody wants to just short something that's up, and then they rip back. Morning, everybody. What's going on? What's going on? Mr. Podell, how are you? What's going on in the land of the Saxons? Or are you a Norman? Hold on one sec. I'm on. What's up? Morning, guys. Gap up in the market again. This is a gap and grind market. Gap and grind market means you just gap up and you kind of just grind your balls higher all day. Doesn't mean anything really. Like those kind of markets are fine. That's what we'd call a stock pickers market. When you get a gap and grind market, it's a stock pickers market, meaning that the market indexes won't matter as much. They'll pop up, they'll pop down, but it'll be in a tight range. You may get a couple shake and bakes on it, but you're just gapping grind as you go higher. So when you have that kind of market, what you really want to do is focus in on plays that have catalysts out. Yesterday, what were they? Right, yesterday you had BYD, you had ENPH, you had LPSN, a whole host of them. Today you're starting to see a monstrous amount of them too. So earnings season is obviously picking up nicely. So let's just go into these. We can just focus in our list. Like we can pretty much get rid of all the junk. There'll be a handful of names like Tesla and Shop that we always watch. But in general, we got a lot of earnings breakouts today. Fastly, non-gap, net loss widens, guidance raised. Great, right? That's just the nature of the game right now. You can see here, you've been kind of basing out here since November. So you're really starting to make a push. This used to be a big-time Momo stock, like when it first came out. In August, it went from 14 to 35, like in a hot second. So it does have the ability to move. It's got a 70 million share float on it. So it's got an earnings breakout. So you got a catalyst. You have a chart breakout. So that's number 2. It's always something you look for. And then number 3, you're right in that kind of mid cap, 2 billion share, $2 billion market cap, 70 million share float. So you got that room to grow without it being like some dangerous small cap that's just going to get you smoked out. I like this one now. It's up 30% at the open. This particular type of name, most likely what I'll wait to do. All of these, I'd rather hit them on pullbacks if I can get them, which is if you start to see, like I want to do a quick pull. Ideally, I get a quick pullback buy on them. If you get an ORB on it, like you'll get a quick shred at the open. But the meatier plays, like if you get the first dip, buy is always the meatier place. Like what you want to do is, as it pulls up, let it pull back into its EMAs. Once you start holding at the 9 EMA or the VWAP, it could be one or the other. Ideally, the 9 will cross the VWAP. You'll start to get a push, and then you're into the play. When you're up like 30% on a stock, that's usually because it's not a small cap name, right? It's $2 billion company. Ideally, we get that kind of pull, and then we can kind of let this thing, do what it's got to do. I like the chart breakout. The catalyst is good. I think we add that to the list. Twilio is a breakout to all-time highs so far. Is this like a text messaging service? Ain't that some shit? I think I use Twilio for like my company. And it stinks, but whatever. So if you look at the weekly chart on this, there's a handful of things with Twilio to understand about its move today. Number one, it's a recent issue. It opened in 2016, so it's not like an IBM or something that's just been around for in 100 years. This is a newer issue, a newer company. Stocks that usually have catalyst, earnings catalyst, and they're a newer issue, always have more juice than, like if you had Exxon Mobil have some catalyst, it could probably move a few percent, 5%, maybe something like that. A newer issue like a Twilio, you're going to have a catalyst. It's a newer issue. If you could couple that with a chart breakout, that's even better. And, it's a fairly low float for the most part, 115 million. So anything under 100 million is considered low. We're not going to be pinching for nickels here. So I would consider 115 million fairly low. So you got the chart breakout. Now, in general, this one's up a lot too, 24%. We're going to be able to get plays both ways probably on a couple of these. My bias is obviously with the trend on the long side. But, if they go bonkers at some point, I'll even look at these for a potential short. But we know they're going to have the range that we need. We got to let these things pull back a little bit, or it's going to be good. Fiverr. Damn. Man, Fiverr was left for dead. It was left for dead. Remember we were trading this? You guys probably remember. We were trading this the day of the IPO. And the day of the IPO, it dipped down and actually did okay. And then the next day, it was just crater. And it got down all the way down. It got down into teens in October. It's a nice comeback for the Fiverr. Issue on Fiverr that I see is that it never has any liquidity. The float is fairly low. You got some shorts in it and stuff. This thing never has liquidity, though. I'm going to put it on my list but at the bottom, in case it start to shred. I'm not feeling that good about it, though. I'll come back to that. Peloton. And somebody check. Does anybody got fly on the wall or trade the news? I don't got mine open. Check and see. Usually if you start ripping like a gap and you get 5-6 analyst upgrades, it'll have legs. It can have legs. You want to see a bunch of them fire off at once. Especially on kind of a name like this where everybody expects it to be a turd, but it's not acting like a turd. This is a big time breakout. 1 test, 2 tests, 3 tests. Break out the highs. Net loss narrows, revenue surges, blah, blah, blah. None of it matters. 184 million share flow, $10 billion company for bikes. Huh? That's amazing. I used to have one of those Trek bikes, man. And they had a public company. Those Trek bikes were hot back in the day. They still around? Man, I haven't had a bike in so long. I had begged my mom for a year to get a Trek bike. My dad kept getting me these Huffies because an Indian, no Indian dad's gonna get his son a Trek. That's just crazy. Yeah, ask the Indian man, can I get one of them Trek bikes? That ain't gonna happen. Children's Palace was my dad's spot. You want a toy? We go to Children's Palace. Now this thing's got a big time breakout, 37 to 45. Same type of deal. If I get the dip and hold at this on the open, we look to see on this thing. And at some point, if it gets bananas, we may even try to play the other way. Like the chart breakout on mRNA, so you had a 9 EMA D rider on this thing, right? Just riding on that 9. So you had a 9 EMA D rider, busting the trend line today. You had revenues, blah, blah, blah. Biotech in general, earnings on biotech stocks don't matter as much. It's about what drugs they got coming out and stuff like that. But this is a big time chart breakout. We got to respect that. It's got $10 range already. It'd be nice, I've noticed the last year or so, if you guys probably noticed, because now a lot more people are trading pre-market. A lot of these gaps are going bonkers before the market opens. The gaps used to be on a stock like this, it might be 5-6%. Man, they're turning on the juice on these things way earlier than they used to. You see this? 4 million shares in volume already. That's That's a lot. You know, they've been turning on the juice on these things earlier than they used to. Add that to the list. mRNA is, by the way, mRNA is a good trader. Second part, so you got a catalyst, 1, check. You got a chart breakout, 2, check. 3, we always want to know, like, does it have a history of making moves? That's the number 3 thing you want to check. Does the stock have a history of making moves? Check. Yeah, man, we were just playing this thing, so we know that it's got a history of making moves. Check. Then the 4th question, it's more of a personal question, is, like, I always ask myself, do I have a history of trading this stock well? And why that's important is that all traders have certain stocks that just cost them money. Everybody has certain stock that just cost them money. So if you have a certain stock that's costing you money, then what's the point of, you know, having that as your focus if you have like 3 or 4 other stocks that have similar catalysts, similar chart breakouts, and you don't got that bad history? Because if you don't think Trader Voodoo, Trader Juju, Trader Karma is a thing, woo! Traders are very, very superstitious, but you can't be trading something that's getting you in the dumper. So add that. But when you start to build out a list, it gets too big. Those are the things that you want to take down. Lift. Now, lift is tricky. So you've got, you know, you're stuck. See, like how you're in range here? I find like when stocks are like more in range versus, so what's the difference? This stock is gapping up on some earnings, but it's stuck inside a range. Stuck inside a range. So if you're stuck inside a range, like where do you go? Where do you come back? Versus if you have a stock that's a breakout, what's cleaner? You know, what's cleaner in terms of supply and demand? So trading, so much of the movement of trading is about supply and demand of what's on top or what's on bottom. So if you have a stock that's breaking out to all-time highs, you don't have any inherent supply on top. You don't have any bag holders also. Bag holders is a big thing in trading, especially if they're a market crash. So when you have a stock that's busting out the highs, there's no bag holders there. There's no price memory there. There's nobody there that, right, lost their rent money because of this stock. So there's that aspect of it. So lift is something that's more like a secondary play because it's just stuck in range. So like I'm going to add it to the list for now, but I'm going to take it off once we go through and we find something better. Teva. Now Teva is interesting because these kind of beaten down stocks that kind of consolidate for a while, they can push. Like you have a longer term kind of base on this one. It moves okay. It's a thick little noodle though. Meaning, like, Teva's got like a 1 billion share float on this thing. It's more stuck inside a range. So it can go. Like, you have room on this up to, like, maybe 13 before you run into any resistance. But it has a couple things that are not going for it. Number 1, it's a thick little noodle. Number 2, like, you're stuck in a range. So it's not a breakout. And then number 3, like the float's a little heavy on this one. So like that's not, that one, it's playable, but like should it be? Yeah, exactly. So I'd take a pass on that one. You know, if I was bored, I would probably add it. But now LVGO, I like this. Check this out. So you got number 1, IPO stock. 2019 IPO. Stocks that have IPOs out of recent, they move better and more powerful than a stock that's going to be a grandpa stock, 50, 60, 70-year-old company, even 20-year-old company. Because it's new. Everybody wants to find the next Microsoft or the next Google or whatever, right? Next Netflix. Will this be it? No, of course not. Probably not, but that's how these things work, right, in terms of the psychology of it. The second part is it should break out to all-time highs. There's no level of supply overhead to hold the stock down. That's very, very, very powerful. If you want to see like an example, like, right, CHGG, you know, this thing had a big breakout, floats pretty low, like you're right in that mid cap. When you have a name like that and you have like a base and then you're breaking out to like all-time highs, you know, and this is not a newer issue, but it's fairly new. When you have a big base and then you're breaking out to all-time highs, you can see it's like maybe like about an 8 to 9 month base. Like you can really go. So like that particular day, you know, the range on it was from 52 to 62 in the morning. That's pretty hot. So like LVGL, break out to all-time highs. Why not? I think this one's on. I like this one better than FSLY. I think Peloton number 2, mRNA number 2, Peloton number 3, FSY 2 low. Lift on the bottom. Lift on the bottom. All right, the rest of this, look, this Viacom junk, right? Like, who want to trade Viacom? Says this Viacom's got some news out, whatever. When you look at Viacom, grandpa company, grandpa industry, a little bit thick, chart so-so. So like you can have a stock like this that's got news out, but that's different than a stock like an LVGL that's busting out the highs and is an IPO. Not all earnings plays are made equal. Not all earnings plays are made equal. The second part that is kind of important for traders to do, on your T2000 you can always do this. If you add in an ATR, so that's an average true range indicator, what you can see is like on ATR, it'll tell you how much a stock is moving up and down in any, you know, over a 14-day period. So like, what's its daily average range? So like if you see like a Viacom, it was like $1 a day. So is this like something, you know, we'd want to like sit there and stare at all day? Nah. Right? Like I'd rather trade the LVGL, $3, a little bit better room. Peloton, $3, a little bit better room. You know, and then, you know, like BYD was $11 a day, right? So like this is something we were trading yesterday. So these are like all kind of things to think about. Can you make, you know, what can you squeeze out? Good. Then GNK down, junk. So PayPal, interesting fun fact, PayPal, which like, you know, I've been using forever, never even thought anything of it. Like you just, you know, get people to send you money on there. PayPal is worth more money than Goldman Ball Sachs. Double. Almost a triple. Ain't that something? Yeah, I just saw that. I was like going through some things. I'm like, huh. You know, like Goldman Sachs, right? That's like the evil empire. Guess not, right? PayPal, see, PayPal, $141 billion market cap. It's just incredible, you know. So like these are the new banks. You know, we always kind of think of when we look at banks and like look at the health of the market. We're always looking at like banks, health of the market, banks. Maybe these are the new banks. You know, like Square stocks, like, you know, companies like Square and companies like Square and PayPal. So Square's got earnings out too. Swings of loss, revenue increases. You know, you got a little bit of a chart breakout here. Not anything that special. Yeah, I think we got better play. You know, STMP. Everybody wants to know about STMP. So STMP's got nice trender, very low float. You got still a decent amount of shorts on it, 11%. You know, in absence of, say you got like two equal setups, you know, check out the short float on them. You know, if you got more than 10%, that's a decent, you know, that's a decent amount of shorts. 20 is like you've got a lot, but with shorts, there's a level of shorting that's almost too much. Like once you get into like the stock that's got like 50, 60%, float short, man, they move really, really weird. Like they shake and bake a lot because, underneath the scenes, there's big players that are short covering like nonstop. They just don't move that clean. So, but this is only at 10%. Now, the issue with Stump, I think, is going to be, it's a matter of liquidity and spread. It's a matter of liquidity and spread. So, like, yeah, this thing is pushing up in the morning. The spread on this, like, you can already see the liquidity is very low. Like, when you get spaces in your charts here, it's telling you the liquidity is really low. Not my ideal, cup of tea, only 15,000 shares. Like, I think it's all right. It's one of those things, like, it's all right. Uber, yeah, it's busting up, but it's stuck in range. It's all right. Uber's thick. Uber's a thick little noodle. Lyft is a thick little noodle. So just kind of some couple things to just be mindful of. Now let's just talk about some non-earnings plays for a second. Yeah, this AYX might be worth a shot. Yeah, it's kind of stuck in range though, pass. Look, MGNX, everybody wants to know about MGNX. This is not on my list. Like, day twos of these kind of moves, yeah, if it takes out this, like, level here, it could go. This is the type of stuff that gets me in trouble. Like, yesterday was an awesome day to play it. I think today you probably get a little bit more chop. And not my tour de jour on that one. What do you think? Yeah. Good. That's the list. And then for day two plays, we got BYND, EMPH, Space. That's it. That's it. I'm sticking to it. That's the list. Space. If this thing cuts over 20, you're going to see it have some real fun. That's the list. Everything else is inconsequential. Hey, Mark Prevet. Welcome, by the way. Send me an email sometime if you ever need a chat. Good. Guys, God bless. Let's go make some money. Let's go do what we do. Let's have some fun. As always, I'll be on Discord. I'll be in our Discord room. Day trading live. On screen share just like this all day. Let's have some fun. It's Thursday. It's go time. It's show time. All right? Woo! Let's do it.